Once again, we are talking about GameStop because, I mean, you can't ignore what's going on in the shares. Up 15% so far today, and it's for exactly what you said. The company completed its share sale program, raised nearly $1 billion in that process. So similar to what we saw with AMC this past month, really striking while the iron is hot and taking advantage of this month's meme stock resurgence to raise funds. The proceeds of the sale will add to GameStop's cash pile. Prior to the sale, that clocked in at about $1.1 billion, and it plans to use these proceeds also for general corporate purposes, which may include acquisitions and investments. So remains to be seen. It's interesting to see a stock rally, 17% after actually raising or selling shares. Not typically what you would expect, but that is really the story of these meme stocks. You wouldn't necessarily expect GameStop shares to be up nearly 60% in May, but Matt, that's exactly what has happened.
Now, let's talk about that GameStop situation. Yes, we got a little, it's not Monday, but a meme Tuesday. Renita Young, what's going on?
Well, it shows that there's still some appetite for trading meme stocks, even though we saw some of those hefty losses over the past couple of weeks. But today comes from that stock sale of GameStop shares. The company sold about 45 million shares, and it was roughly $933.4 million in this equity offering. Now, the company did not disclose what price the shares were actually sold at that part, but we know that it being sold at the market means that shares were sold at market price at the time, but it was not a predetermined price. Now, here's the question, Oliver. Why would GameStop sell nearly $1 million in shares? $1 billion, pardon me, nearly $1 billion in shares. A strategist over at Interactive Brokers said via Barron's.com that when a company sells stock through a spot secondary offering, it's typically in response to market conditions that cause management to believe that the stock is better sale than a buy. Now, it's not necessarily when the stock is undervalued, but specifically when management feels like the stock is a better sale than a buy. Now, the company says that they're going to use the proceeds for general corporate purposes, which could mean for acquisitions, for investments. And of course, we know this comes right after the company posted first quarter sales that dropped. It's expecting a loss to narrow year over year in the current quarter, but sales to continue to drop in the current quarter. And of course, after that recent Roaring Kitty themed meme stock rally that the company went through along with AMC, which is also up today.
Yeah, a little, this is the meme world. Sell shares, stock goes up. But look, I mean, when you have, it's kind of this weird sort of Rorschach test of what you want from your company, because when you do get a huge rally for no reason, it makes sense to sell shares. But the thing is, too, like we've come down so hard from it. But all right, I guess it makes a shred of sense, and that's more than it often does with GameStop. So okay, we'll see if the bid holds on. 19%. All right, thanks, Renita. All right, almost $1 billion of shares sold.
Meantime, let's talk about some meme stocks this morning, because GameStop shares, they are sharply higher this after Friday's close. The company said it made more than $933 million by selling 45 million shares. That works out to a sale price of roughly $20.74 per share. Stock had been trading below $11 at the start of May. Theater chain AMC also announcing last week that it completed a $250 million share sale, and that stock up as well. I would have thought that it would have been better for an AMC because they have enormous amounts of debt. So any kind of debt that they can pay off, even if they dilute their shareholders, I mean, is not great. I mean, is better.
Rough, though, right?
But I was going to say for GameStop, different story.
Yeah.
So I'm unclear why those shares are rising the way they are.
You can probably look back at Roaring Kitty for part of this, for sitting up and taking notice, for getting...
Sure, but if you raise all that, I mean, but that's just a straight dilution story.
Yeah, it is.
Hey, Matt, Adam Aaron, who runs AMC, is a character in the What I'm Hearing world. That's the name of your newsletter. What do you make of him selling shares in the company over I guess late last week? What's that do for the company given the debt load? Does this make you feel better about the company, worse about the company? I mean, obviously there's dilution for the shareholders, but it should put them in slightly a better place than they were before.
Yeah, listen, Adam has a recent history of selling shares when they get inflated or boosted by the apes, like the retail shareholders. He did it during the pandemic when AMC shot up, and he's doing it now when there's been this bit of a boost, not as big, obviously, as the meme stock stuff of the pandemic. But, you know, he says it's estate planning. He says he's on the side of the shareholders. It's a tough one because he is a big cheerleader for the company, and he's a big shareholder, and he says he's with them the whole time. But then you see him selling, and you wonder a little.
Meme stocks look like they're coming back. What specifically is pushing them up? I think I know, but you tell me.
I mean, 17% for GameStop.
Yeah.
They raised $933 million after selling 45 million shares. Do the math. That's an average $20 each. This stock was like $10 3 weeks ago. Also, they could use the money to pay down debt. They can use the money to make investments. AMC, where are they? They're at $5. They're up 3%. They also completed a $250 million share sale.
Meme stocks are back.
Yeah.
Get your gambling instincts going.
Not really moving shares of IMAX, but Jim, AMC was up, 5 pre-market?
Well, that's a meme stock because the meme people don't realize that they're just they're useful idiots to keep this company alive. I never liked that term.
What do you term the people who are sending NVIDIA up another 5%? We're talking about it now approaching $2.8 trillion in market value. And I just want to keep in mind, so that would exceed everything other than Apple and Microsoft in terms of market value. NVIDIA, right near $2.8 trillion.
Well, David, if you're going to take over the world, you should get a little more higher valuation.
Yeah, I guess. Only $7 trillion to go, pretty
David
much.
Doesn't, this morning I was listening to something. Blackwell, David. It's kind of like plastics.
Yes. Blackwell.
Yes, GameStop recently raised $933.4 million, excluding commissions and offering expenses. Now, the company has roughly $2 billion of cash on hand. According to GameStop's most recent 8K filing, they intend to use the capital for general corporate purposes, which may include acquisitions and investments. His post from Larry Chang has me very interested to see what GameStop does with this capital. Larry posted, quote, "Do you remember when Berkshire Hathaway was a textiles company? American Express was an express mail business? Nokia was a pulp mill? Samsung was a grocery trader? Marriott was a root beer stand? Instagram was a check-in app? I don't. Businesses evolve. Other examples? Considering Larry's connection with GameStop and considering GME's sizable cash position right now, I'm excited to see what the future holds. Ultimately, I want GameStop to survive and reinvent its business model in a meaningful way. As individual investors, what we want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.